The market is not doing much actually. It's still quite stable. It's recovered from the lows of trade and getting to the high point. But really, it's not much in terms of a move on the index. Still holding above the 10,900 mark though. Ashwani Gujral, Mitesh Thakkar are here to tell you what to buy today and sell tomorrow. Gentlemen, afternoon once again. Mitesh, what would your calls be?
Yeah. So I would take a buy on CESC. That's something which is showing good pricing volume action. Buy with a stop at 709. Look for targets of 745. And ICICI Pru, in fact, it's moved up in the last few minutes, but close at about 321. Can be bought with a stop at 317. More of a BTST kind of a call, and look for a 328 as your target.
All right, Ashwani, you've got some picks for us?
The first call I am taking is that rupee appreciation is enough above, once you are above the 70 zone, it's only a matter of time, 69, 50, 60, you'll get a turnaround. And if there was space, the IT index would be down 200 points right now. So IT index isn't taking big cognizance of this because it's come off from the highs. So those calls on large cap IT I'm taking home. Overall, PSU banks are now down 2 to 2.5%. So that way, the banking news flow and bullishness, etc., according to me, is now getting done. And with that sort of view, Larsen is a buy with a stop of 1430, target of 1485. I think SBI is a sell with a stop of 298, target of 283. And Canara Bank is a sell with a stop of 272, target of 255.
Okay, well, a couple of buy calls and some sell calls. In fact, even in this market, a lot of stocks hitting new highs. PVR is at a new high today. It's crossed that 1500 mark. It's had a terrific run. This month itself has gained about 10% Marico is also at a fresh 52-week high this afternoon, although it's come off a little bit from those highs, but 380 now on Marico. But let's get one more guest in. N. Jaikumar, the president of Prime Securities, joins us now to talk about all things to do with 2019. Jakes, hi, good afternoon. This year has passed by so fast, and the kitchen sink has been thrown to the market and the market has recovered. Every bad news has been digested. You think these are signs that the bull market will still continue well into 2019?
Well, I for one believe that all that has happened is we've had a sharper cut on an across-the-board basis and a milder cut on indices. So nothing has, from that perspective, disturbed the bull market. I think if you look at it from an index standpoint, 11,700 went down to 10,200. If anything, I think the testing of the 10,200 range, which we on this channel have been talking about as a reasonably secure bottom, I think that's held and has indicated that there may be an index rebalancing, if you will, from a market point of view. But some stocks have taken the lead at that point in time. Remember that this time the bottom happened with oil threatening to run away beyond 85 and the rupee threatening to completely melt above the 74 levels. So in the face of those kind of headwinds, the market found a durable bottom at 10,200. In fact, it didn't even go to those to anything below those levels even for a moment. So I think those levels will hold. What has happened, however, since then is pretty interesting, which is that and we've been we actually made a call of an absolute top on the oil at those levels of 85 plus. And as we sit and sort of view this today, I think the fall in oil could be, we could be only in the middle of this fall. Wouldn't surprise me at all to see first quarter next year, Brent trading distinctly below 50 in the 42, 48 range and correspondingly for the WTI. So in the face of that, I think you could be talking about substantial rupee strength, and we could go back to test, to my mind, 67, 68 levels on the dollar rupee. And if you take that as the backdrop, then all that you're left with in terms of headwinds is what will happen in the elections, come April, May, June. So I think the market today will probably continue to trade in a range of 10,200 of the low to about 11,200, 11,300 max. And this 10% range, I think, will hold till pretty much the elections. And then you could have a move well beyond that in the context of these sort of slightly out of the box predictions that one is making. So that's the world view, and I think therefore it doesn't surprise me that the markets withstood the kind of shocks it has over the course of this year.
Well, Jakes, you made a point about the broader market seeing a far deeper correction post this big correction that you've seen in the broader markets. And if the index is going to hold in this range of around 10,200 and every bad news is being bought into, will you start deploying money in some of these mid caps and small caps as well? And what are the cash levels you're sitting on as of now?
Well, on a personal basis, I would say that cash levels have been deployed in recent times. We probably, on a personal basis, I'd be probably closer to about 15 to 20% cash, and otherwise, largely invested in the markets for long periods of time. We are creatures of the equity market, as it were. So that doesn't. I mean, this is not a sort of outlandish number to say that you're 80-85% deployed. The interesting thing, again, as I said, is that again we. On an individual basis, I mean, Prime as an individual, as an organization, doesn't invest in the markets. But as an individual, I would say that mid-caps has been the area that one sort of goes out to hunt with the attendant risks of the markets that we see right now. So there are a whole bunch of stocks and sectors. Don't want to talk stock specific, but from a sectoral perspective, I think after many years, the PSU banking, especially the top 2-3 in the PSU banking space, I think offer tremendous value, and you could have massive earnings upgrades on the back of probably declining NPA write-downs or NPA provisioning, on the back of growth as the NBFC engine sputters, given that lending to that for growth is going to be pretty challenging in the quarters to come. So I think the PSU banking, especially as I said, the top 2-3 names with growth, declining provisioning, more and more moving to earning assets from non-earning as they were. I think we could be talking about some very interesting plays in the PSU space. That's one. The second space, which I think, could be in for very interesting times, I think could be the inevitable consolidation in, let's say, something like the aviation space, which lots of corporate news are doing the rounds. From that perspective, I think consolidation of interest, some pricing power coming back, and oil on a declining trend. That's a space that's been growing 20-22%, but individual players haven't been able to show profitability. I think sane pricing could return there. So that's a second space that I like. One or two top tier pharma companies. There's been already a rejigging in terms of the pecking order. Some of the big ones have faced headwinds on unexpected fronts, including things like corporate governance. So I think the field is out there pretty clear for 2 or 3 of the top pharma names to get re-rated pretty dramatically. Number 3, so that's the third space. And I think the NBFC de-rating, which has happened across the board, leaves you with some interesting names that have also been brought down, say 50-60%. And some of those names, as they pick up long-term funds or actually start splitting companies into and raising money on individual verticals, those NBFCs or those financial services companies, especially those in the wealth and asset management space, could meet with, I think, some kind of move up. So the first broad brush downgrading has happened. Now comes the stock picking even in the financial services space. Other than that, I think the NBFC challenges still continue, which is a problem that there is. And I think a few private sector banks that have been richly valued, facing governance issues, could get derated even further.
Okay, well, the market has recovered quite a bit actually from the lows of 10,880, which was the low on the Nifty that we hit. 10,950 is here, so it's a dramatic recovery. And mid-caps also are now back in the green. Big moves coming in on oil marketing companies this afternoon. HPCL, BPCL, IOC in the green. So just before we let you go, Jakes, the big imponderable now is the upcoming elections, right? Whichever way things go, do you think this market will still emerge 5 to 10% higher by the end of the year? I mean, that's a base case that I'm looking at, whichever way the elections head.
I think post 11,200 and post the elections, depending on what happens, around May, June, regardless of where the market is, I think it will find new wings, as it were, post the elections when the uncertainty is over. Unless, of course, we're talking about, completely unimaginable scenarios in terms of numbers in the elections. But even given lower majorities as currently being predicted, lower numbers as currently being predicted for the ruling party, I still believe the market will emerge higher post-elections, number one. And number two, my own sense is that, things like PSU banks that we're talking about will also benefit, because I think there's going to be a lot of money that's going to come back, which is the other aspect that we didn't cover, which is both the FII flows into this market will only increase, number one. Number two, the movement into the debt markets, I think we'll have significantly more amounts of foreign debt walking in to these markets, and therefore the long bond, I think, could even trend lower to 675, 680 levels, well below the 7 levels over the next 6 months. And were that to happen, it almost presages an interest rate cut at some point in time. Inflation is under control, and I think those could be the tailwinds for the markets to take new wings post May, June.
Okay, well, on that optimistic note, we will let you go. Jakes, Happy New Year to you in advance, and thanks so much for stopping by and speaking with us. But moving on, the Niti Aayog released a report yesterday titled Strategy for a New India at 75. The most significant recommendations are to do with agriculture and the promise to double the income of farmers in the next 4 years. Let's cut across to Shireen now, who is in conversation with the Vice Chairman of Niti Aayog, Rajiv Kumar. Shireen, over to you.
Well, thanks very much. Yes, indeed. Let's go across to Mr. Rajiv Kumar. Sir, thanks very much for joining us on CNBC TV 18. Before I come to the specific recommendations outlined by the Niti Aayog in your strategy paper for 2022-23, I would like to address the issue which we are currently grappling with, and that is the farm loan waiver. There is a clamour picking up now for a national farm loan waiver, perhaps the kind that we saw being unveiled by the UPA in 2008. Now, so far, the government has said that there is no plan for a national farm loan waiver, but is there any possibility, any discussion, any conversation at the level of the Niti Aayog or the Ministry of Agriculture with the Niti Aayog on what could be done at this point in time if not a farm loan waiver?
Hi Shireen, on the farm loan waiver, I think the Finance Minister has said very clearly that it's the state's prerogative and they are doing what they think is right for their state. I have not had any conversation here in Niti Aayog on any such possibility, so I really don't think I could say anything more than that. There are, of course, a number of steps that the strategy document has suggested on how to tackle agriculture, and I think the central government will consider those and perhaps other measures as we go along.
You're saying that you have had no discussion on a national farm loan waiver, but what about some kind of an income support scheme? A lot of people seem to suggest that what is being done in Telangana, for instance, is the right way moving forward. Now, something is broken at this point in time with the agrarian economy. Whether you like it or not, intervention is required. You may not agree with the waiver as being the best way forward, but what can be done to provide relief to the agrarian economy today, sir? The strategy paper outlines a roadmap for the next 2 to 3 years, but what do you do about the situation today?
Oh, you're absolutely right. That's an issue that needs to be addressed, and it seems state governments are doing it in the manner that they're doing it. We were so far completely overtaken by the strategy document and the road ahead. We will be discussing this very soon and intensively on the Telangana model of benefits of 4,000 rupees per hectare per season. If you implemented that at the overall in India level, the cost could be quite significant.
Okay.
Our member agriculture, Dr. Ramesh Chan, puts it in quite a large. It's probably more like 2 lakh crores or something or of that figure. Now it's something that the figure is out there and the model is there, is well known. Thing to remember, however, is that the Telangana model is providing direct income support to the farmers over and above all the subsidies, input subsidies that they get. So this could be one of the options. I'm not ruling anything out, Shireen, at the moment, except to say that we in Niti Aayog are addressing the issue, are we've taken note of it. But at the moment, there is not much that I can say by way of what actions or measures we would be recommending.
So was the Niti Aayog tasked with putting together some kind of calculation on a national income support scheme? Because our understanding is that it could be shared between the centre and the state if that were to go through. So has there been any preparatory work done? Because you gave us a number of, a broad estimation of about 2 lakh crore rupees for an income support scheme. Has there been any sort of conversation on the possibility of a national income support scheme?
No, there hasn't been. There hasn't been any formal conversation. This is something that I mentioned to you, which is something that we've it's like a personal discussion we have within our members at Niti Aayog.
Okay.
But nothing more than that, Nishiri.
Okay, nothing more than an informal conversation. So there is no formal conversation on a national level income support scheme mirroring what we've seen the Telangana government roll out. Let me then talk to you about the road ahead, sir, because the Niti Aayog has made several recommendations, and I'll just pick up on a few of them. For instance, when you talk about marketing reforms, you say adopting the Model Agriculture Produce and Livestock Marketing Act of 2017 should be adopted by all states as expeditiously as possible. But the reality, sir, is that till now, Arunachal Pradesh is the only state to have adopted this law. So what gives you the confidence that this is going to be expeditiously adopted by other states? Even the BJP's own states have not adopted it so far.
Yeah, the confidence that we got from that during as a part of the consultations for preparing the document, we had a very detailed and meeting with with this very senior officials of all the state governments who had come here, and we had discussed the road ahead for agricultural reforms, and we at that stage had got a commitment from them that from one state after the other that they will adopt this law, and they will abolish the APMC and replace it with this law, because this is the law that gives the farmers all the sort of the freedom that he requires to market his produce wherever and to whoever he can. Now the issue simply is that
We'll close flat for the day, but don't be fooled by the flat movement. There was a lot that happened through the day. The most important bit is we recovered from the low point, and amidst the context of a lot of global volatility, India has outperformed. Siddharth Sidani of Anand Rathi also joins in to our conversation now in the last 10 minutes of trade. Siddharth, hi, afternoon. What are you advising investors to do now? If you had to pick 3 or 4 large cap stocks from an investor standpoint, what would be your top bets?
Well, in terms of market, if you look at the markets at the current state, I think markets are more than priced in. So looking at the recommendation in the large cap space, we are looking at some of the consumption stories also, like of Hindustan Unilever. Some of the crude derivatives where there is a big beneficiaries likes of Asian Paints, which is again a consumption story which we are liking. Apart from that, in the private banking space, which we are recommending to our investors, likes of the leaders of the space, likes of HDFC Bank. In fact, looking at the recap thing which government is contemplating on, I think banking is definitely a beneficiary, but apart from that, infra space is also looking very strong beneficiary. So looking at that, L&T also one of the factors which we are advising our investors, because 2019, although we know a lot of uncertainties over elections and so on and so forth, but still we believe that infra growth will be definitely coming up. So L&T would be a top bet.
All right, so L&T is a top bet, but Siddharth, you mentioned that in fact, this bank recap is something that you like. From the banking space, you're talking about PSU banks. That's something you're looking at?
Well, PSU banking space, we are very selective. In fact, once the news comes out and once everything is done with, I think there would be some kind of a sell on news on the PSU banks are concerned. So we are looking at PSU bank very selective, likes of something called Indian Bank, where they have adequate capitalization with themselves. In fact, the balance sheet is quite good. The downside looks little limited. So Indian Bank kind of a story which we are looking at in the PSU banking space.
Indian Bank, okay. So you still believe that PSU banks are worth buying? I mean, they've just destroyed wealth over the last 2 years, but you still recommend buying?
That's what I'm
PSU
saying.
bank?
We are very selective in the PSU
Okay,
banking
okay.
space. In fact, we are overweight on the private banking space. As I said, that kinds of HDFC Bank, IndusInd Bank looks very attractive to us. PSU banking space very selective and likes of IndusInd Bank only.
Okay, we have about 4 minutes left, so let's just try and wind down the day's trading, get some final calls in as well. Ashwini, give and take everything, this market has recovered from the low point and outperformed a lot of the other markets. What would the recommendation be for tomorrow? I mean, at any point would you suggest going long?
See, basically to go long, you need to see where can you put your stop. Now the stop, the earliest place you can put in is probably today's low. So if you are in, just update your stop to today's low. If you are still not in, then you wait for your 200-point correction on Nifty, maybe 400-500 on the Bank Nifty, and then get in. Because the day Bank Nifty collapses, it will collapse 500 points. So the large gain for the moment is done. Now where can the large gain come in? I think there's a good chance that the IT sector bounces back a bit and maybe rupee depreciates some, and there the risk reward is much more favorable. You have say 100-150 point downside on the IT index, maybe 300-400 points upside, but Nifty, Bank Nifty have kind of peaked out.
So you would advise someone to take money off the table instead of carrying the positions to tomorrow. You had a big recovery on the Nifty Bank, and also today keep in mind there is weekly expiry that's playing out. So that could be one reason why the Nifty Bank has recovered 150 points. Ashwini, someone who's made that money, wind up your position today or carry it till tomorrow?
See, you often make the mistake of, for the last 100 points, you tend to lose 500. So if you got in early, you made 800 points, I think it's a good time to take it off. The job of markets is to go up and down.
All right.
So the biggest fool will be buying right now.
Okay, all right. So take some money off the table is the advice that's coming in there. I just want to alert our viewers, the Dow futures as well in the morning was suggesting a cut of more than 100 points. Now it's cut those losses to around 20 points. So that's something as well. You could have a bit of a recovery in the US markets today as well. Mitesh Thakkar as well as with us. Mitesh, what's your final closing strategies for today?
No, I think I would continue holding long positions. I believe that today the recovery was a good sign. We opened near the low of the day and closing at the highs of the day. Good chance that we'll see a follow through tomorrow.
Okay, we just have, what did you say? Sorry, I missed that. Good chance that we'll see a follow on tomorrow?
That's right. So the up move will continue for the next 1 or 2 days.
Okay, so up move will continue for the next few days. I will also just take the final views in a bit. We have about 1 minute 57 seconds to go. So let me just wrap up the day's trading action. As we said, the market recovered almost 70 points from the day's lows and is closing at the high point, 10,958 on the Nifty. So it turned out to be a good day for the bulls today. If you had bought at the start of trade, you would have definitely made money on the long side. The mid caps also closing in the green, not a bad day at all. What led on the way up was some of the banking stocks. Yes Bank was your top gainer, up about 4%. You had Kotak Mahindra Bank that was up about 1%, IndusInd Bank that closes in the green, and HDFC Bank too. In fact, apart from banks, it was oil marketing companies that did really well. HPCL, BPCL, IOC. That big fall in crude in late trade caused all the crude beneficiaries to move higher. So whether it's oil marketing, paint companies, Asian Paints up almost about 2%. And this whole capex cycle recovery is something that a lot of people are betting on. L&T is slowly and steadily has come back closer to that 1500 mark. In fact, today as well, L&T was up over 1%. So don't lose sight of that. Some auto stocks like M&M, Tata Motors, etc. did well today. On the downside though, you had Maruti Suzuki. Remember, the company has cut their full year estimates from a double-digit growth to 8%. So the stock is factoring that in. ICICI Bank came in for some profit taking today. Wipro was down about 2% or so. In fact, a lot of the heavyweight technology names, TCS, Wipro, etc., closed a tad bit in the red. Tech Mahindra was also in the red by the end of trade. So by the end of it, flat. But what we did do, Nigel, was hold on to our gains of the last many days, which is quite impressive considering the way global cues have moved.
Absolutely, Sonia. We had every reason to have a 50-100 point down day today. So it's been good news that in fact we did see a bit of recovery, but the action really was in the mid-cap space today. All through the day, the mid-cap index did do a relative outperformance. You had stocks like Saturn Credit Care that's got badly beaten. That popped up. It was up more than 17% by the time we were winding down. Also, a few more stocks like Kesoram Industries. We were talking about the demerger that did come about, but in fact, that stock as well was up close to around 10%. And talking about auto stocks, select auto stocks like a Jamna Auto that's corrected from around 90 rupees all the way to around that 60 rupee mark. That stock as well did have a good day. It was a lot about these companies lending some of these NBFC stocks. Ujjivan popped up in trade. You had a DHFL as well that was up and about. And even an Equitas did see good gains in today's trading session. So we're pulling the shutters down as we speak. The Nifty ended with a cut of only around 5 points after starting off with a cut of around 50 points. The mid-cap index ended in the green, and the positive part today was we had more number of stocks that were advancing in comparison to a number of stocks that were declining. But we have a couple of market experts with us as well in the studio. Siddharth, I wanted your view on Pidilite. Now, that's a stock that in fact had hit a fresh high earlier this week. You're positive on that one?
Yes, we are positive on Pidilite. Again, a crude derivative stock which is beneficiary in terms of their products are concerned. In fact, they're pouring into waterproofing and other businesses which they are looking to grab more market share. So looking at the consumption play, of course, the brand, strong brand franchise which it holds, we are positive on Pidilite. In fact, we have a target of 1345, and we believe that quarterly results which will be posted in the month of January, I think that will be also quite strong.
Okay, well, on that note, gentlemen, thanks a lot for joining us and taking us through the last 1 hour of trade. So it's been a good day for the bulls. The Nifty recovered over 50 points from the day's lows to close flat, and the mid-caps ended in the green after the handsome gains that we saw all of last week.
We told you first, and now it's confirmed. The government tables a second supplementary grants for additional 41,000 crore rupees to recapitalize the PSU banks. Sapna Das had alerted us yesterday itself. She joins in with more details. Sapna?
Well, the capital push for the government is a big relief for the public sector bank space, and if you look at the numbers, they are big. 42,000 crores still remains from the current budget allocation of 65,000 crores in terms of recap bonds waiting to be infused, and now you have an additional support coming in of 41,000 crores. So you're looking at a number of almost 83,000 crores worth of recap bonds to be infused in the public sector banks during the current financial year itself. So this is a big number that you're talking about. Within that, we are also given to understand that at this stage, if you go ahead and do this capital infusion, it may be possible that some of the banks which are under the PCA framework and where the indicators have improved considerably over a period of time, those banks may be able to do an early exit from the PCA framework. This is the broad sense that we are getting right now. Now, some of those banks where the indicators have been pretty good, the NNPA levels, especially for Allahabad Bank and Bank of India, they're below 8%. Other banks are also being spoken about. Say, for example, the Corporation Bank, OBC, there could be some movement forward on that front as well. If you look at the risk-weighted assets for the PCA banks overall, those risk-weighted assets have come down by around 15%. That's a big number again, and that will also free up additional capital. Very quickly, the other point is that with this kind of a capital push coming in from the government, you're looking at an envelope size of 1.06 lakh crores for FY19. If you take both the budget estimate as well as the additional estimate now to put together. So this will also help the banks raise money from the capital markets. That is also a pitch over here. 58,000 crores was the original target given at the time that the recap plan was announced, out of which I think the number that they have raised is just around 10 to 12,000 crores. So it's a big push on all sides. Of course, we'll know the contours of this entire program more once the Union Finance Minister, Mr. Arun Jaitley, addresses the press sometime towards 3 to 4 o'clock towards the later part of the day today.
Well, thanks so much for that, Sapna. Moving on then, 2018 saw the world's biggest e-commerce deal go through, and it was a big moment for Indian e-commerce poster boy, Flipkart, which not only took the center stage, but also gave global retail giant Walmart its first chapter in the Indian e-commerce story. CNBC TV 18's Priya Sheth reports on the events that have further intensified the battle between China's Alibaba and American retailers, Amazon and Walmart.
For Binny Bansal and Sachin Bansal, who founded Flipkart from a small house and grew it into a multi-million-dollar e-commerce giant, 2018 has been an inflection point. American retail giant Walmart came calling and liked what it saw and picked up a 77% stake in the apparels to books marketplace for a whopping $16 billion. This valued Flipkart at a whopping $20 billion, but more importantly, gave Walmart, which has been largely confined to the cash and carry wholesale market in India, a crack at the Indian B2C market.
When you look at our investment in India, I think the merits are strong. I think Walmart can add value to Indian society. As you know, we've been there for a long time, and I've invested time there. And I really do feel like whether it's the food supply chain, supporting Flipkart can make an even bigger difference in the country. And I think the government will see it that way.
Throughout the negotiation stage, or the portion of the stage that found its way to the public domain at least, small traders across the country came out in protest. But in August, the deal got the blessings of the Competition Commission and it went through. Sachin Bansal walked away from the company after the deal, leaving co-founder Binny Bansal in charge of the Indian operations. And despite fears that Walmart would dictate terms, Bansal insisted nothing had changed at Flipkart, not in operations.
So the good news is there is no integration plan, and I mean there was no integration plan. That was the part of the plan, was to not have an integration plan. So we continue to be board run. We have a few people from Walmart on the board. So from a market-facing, consumer-facing standpoint, nothing changes at all from an business operating standpoint. So mostly from a compliance and governance perspective, obviously, we need to make sure we comply with all the policies that Walmart globally has.
And not in aspirations.
It is to do more of the same, to be a global technology powerhouse out of India, with the likes of Tencent and Alibaba in China and other companies in the US. So I think that remains the aspiration, with hundreds of millions of people using our services, whether across e-commerce or payments, fintech, and other things we do in the future.
Of course, Walmart's acquisition meant Amazon, which had been courting Flipkart to increase its presence in the Indian e-commerce market and keep global rival Walmart at bay in one fell swoop, has had to rework its India strategy and ostensibly eye a stronger presence in the offline retail space.
In this, Amazon is banking on the stakes that it has picked up in department store chain Shoppers Stop as well as Aditya Birla Group's retail chain More. Amazon is also in talks with Kishore Biyani's Future Retail for a sub 10% stake. Expectations are that this deal could be closed in early 2019. But this means that the e-commerce game is going to be played by a new set of rules, especially as the other big threat, that's China's Alibaba, which has a presence in the online retail as well as the digital payment space, raises the stakes. In Mumbai, Priya Sheth.